Welcome to Talk Tickers. We cut through the noise of earnings calls to deliver the crucial insights for you, the experienced investor.
And today we're doing a deep dive into the first quarter 2025 earnings call.
Yeah, it looked like a pretty packed quarter. Was this a real step change, do you think, or more of the same?
Well, the first quarter definitely showed, I'd say, a compelling picture. Growth really accelerated.
Okay.
Especially in the U.S. market. We saw some, significant year-over-year revenue jumps driven by, demand for their core stuff and notably a big expansion in their commercial business.
Okay, so top line growth definitely strong. What were the key headline numbers that kind of suggest this momentum?
So overall revenue, up 39% compared to last year.
Pretty solid.
Yeah, but what's really striking is the U.S. performance. U.S. revenue surged 55%.
55?
And it's now, get this, 71% of their total business. It's really dominant.
71%. So the focus is clearly the U.S.
Absolutely. And within that, U.S. commercial, that grew an exceptional 71% year over year. While the U.S. government side also pulled its weight, up a solid 45%. So yeah, that U.S. focus seems to be the main engine right now.
The U.S. market is definitely where the action is. We also saw their Rule of 40 score picked up a bit. What does that tell us?
Yeah, it went from 81 to 83, which, suggests a healthier balance is developing between that fast growth rate and their profitability.
Right, which for sauce is always a good sign.
Exactly. It's often seen as kind of an indicator of sustainable expansion. And, the call kept coming back to this strong demand for their AI platform, AIP.
IP, right.
That was mentioned repeatedly as a big factor driving this outperformance. So it wasn't just about selling more volume. It seems like the core tech itself is really hitting the mark.
And drilling down on that U.S. commercial success, it sounds like it wasn't just landing, lots of smaller clients.
No, precisely. That U.S. commercial revenue didn't just grow fast. It actually crossed a pretty significant milestone, over $1 billion in annual run rate this quarter.
$1 billion ARR in U.S. commercial.
Yeah. And they also reported really substantial growth in U.S. commercial. Total contract value, TCV, the bookings.
Mm-hmm.
And maybe most tellingly, they doubled the number of big deals, the ones over $1 million in U.S. commercial compared to Q1 last year.
Doubled the big deals.
Yeah. So that suggests they're not just getting more customers, they're locking in much larger commitments from bigger companies.
Right. And that kind of Q1 momentum, that must have really flowed through into their outlook for the rest of the year.
Oh, absolutely. Based on this performance, they raised their full year 2025 revenue guidance. Okay. And specifically bumped up their expectations for U.S. commercial revenue, too.
Makes sense.
And we also saw a pretty substantial increase in their adjusted operating margin, which points towards, better efficiency.
Right.
Plus, they generated strong adjusted free cash flow. So these aren't just like vanity growth numbers. It points to potentially a very profitable path they're on.
Okay, let's really unpack that revenue growth then.
Yep.
I mean, 39% overall is good, but those U.S. nuances seem critical.
Yeah, digging deeper. That 55% surge in U.S. revenue, making up nearly 3/4 of their total, that just underlines how strategically vital that market is for them now.
Mm-hmm.
And the 71% growth in U.S. commercial is, frankly, remarkable. Suggests a really strong product market fit there.
Yeah. Even
the 45% growth in the U.S. government, while a bit lower, is still, significant expansion.
And sequentially. Was there momentum within the quarter?
Good question. Yeah, U.S. commercial revenue was up at 19% just from the previous quarter. So that suggests, sustained upward movement, not just a one-off annual jump.
Right, not just an easy comp. And this growth, it's clearly tied to bringing on new clients, but also getting more from existing ones.
Exactly. They locked down a, frankly, remarkable $810 million in U.S. commercial TCV.
$810 million?
Yeah, which, when you factor in contract duration, is up 239% year over year.
Huge number.
It is. And as we mentioned, doubling those $1 million plus deals in U.S. commercial really shows they can land and expand with large clients. We also heard some specific examples, rapid adoption in healthcare. They mentioned Walgreens, a Fortune 500 healthcare name in finance, citing a global bank.
Right.
But what's really compelling, I think, is that big names like AIG, Citibank, BP, L3 Harris, they're apparently talking publicly about the positive impact of the partnership on their own earnings calls.
Oh, interesting. So external validation.
Yeah, exactly. That kind of third-party endorsement is, invaluable, really.
Yeah, that speaks volumes. Now, the engine behind all this seems to be this AIP technology. Can you elaborate a bit on what makes it tick?
Well, the constant drumbeat on the call was the strong, almost unrelenting demand for AIP.
Okay.
The company basically frames it as the key, the thing that lets customers actually use AI models effectively in the real world, in their business processes. And it's facilitated by their underlying ontology.
The ontology.
Remind us what that is again.
Think of it like the connective tissue. It helps the AI understand the complex web of data and relationships within a big company.
Got it. The context layer. Exactly. So AIP then is positioned as the tech that translates the raw power of large language models into actual business outcomes.
Right.
There's also a big focus on this idea of enterprise autonomy. Essentially, AI agents that can automate tasks and really boost productivity.
AI agents doing real jobs.
Yeah.
That feels like a significant step. Any concrete examples they gave?
Yeah, they mentioned agents being deployed for pretty critical functions, like at AIG, using them in underwriting.
Okay, speeding up risk assessment maybe?
Potentially, yeah.
Yeah.
Faster, more accurate. And within the DoD, Department of Defense, agents are being used for intelligence analysis.
National security implications there.
Right. Speed, efficiency in critical tasks. And in healthcare at Tampa General, they even mentioned using them for sepsis monitoring.
Sepsis monitoring. Wow. That could directly impact patient outcomes.
Could be huge. And beyond AIP, their Warp Speed initiative, that's the one focused on modernizing U.S. manufacturing.
Right, the reindustrialization theme.
Yeah, that's apparently still exceeding expectations, both in adoption by manufacturers and how fast they're developing the product itself.
Okay.
They also flagged the first delivery of their Titan vehicles to the U.S. Army. That program got rated top performing, and mentioned growing use of their Maven Smart system, not just in the DoD, but also with NATO allies. So traction in government too.
So it's like a convergence. Strong market uptake, the tech advancements like AIP and agents and these real world applications. How did this all filter down to the bottom line beyond just revenue?
Okay, financials. Well, hitting that $1 billion annual run rate in U.S. commercial, that's a big milestone.
Definitely.
Rule of 40 score up to 83, as we said.
Yep.
Adjusted operating margin saw a really nice jump, 800 basis points year over year, hitting 44%.
44% adjusted op margin. Pretty healthy.
Very healthy. And they generated robust adjusted free cash flow, $370 million, which is a 42% margin, also strong.
Okay. Customer growth.
Customer count grew 39% year over year, up to 769 customers.
Right.
And importantly, the average revenue from their top 20 customers over the last year grew 26%, hitting $70 million per customer.
So they're getting more from their biggest clients.
Stickiness. Exactly. Shows strong expansion within those large accounts. Commercial TCV bookings overall were up 84% year over year. And that U.S. commercial TCV booked figure jumped 183% to the $810 million we mentioned.
Okay.
Their total remaining deal value, the backlog basically, also up substantially, 45% year over year, almost $6 billion.
Wow. $6 billion RDV.
Yeah, provides a strong base. Net dollar retention rate improved too, up 400 basis points to 124%.
24 NDR. That's solid expansion.
Very solid. Suggests good upsell success, customer satisfaction. Adjusted gross margin stayed high at 82%.
Okay.
Adjusted income from operations was $391 million. And on a GAAP basis, they're profitable too. Operating income of $176 million, net income of $214 million.
So GAAP profitable.
Yep. Operationally, they generated $310 million in cash, and they did buy back about 2.3 million shares. And they finished the quarter with a very strong cash position. $5.4 billion in cash, equivalents, and short-term securities. Lots of flexibility there.
$5.4 billion. Okay, quite a war chest.
Yeah.
So based on all that, what are they telling us to expect going forward? What's the guidance look like?
Right, guidance. For Q2 2025, they're aiming for revenue between $934 and $938 million.
Okay.
And adjusted income from operations between $401 and $405 million.
All right. And for the full year?
Full year 2025, they raised revenue guidance, now expecting between 3.89 cents and $3.902 billion. That's about 36% year over year growth.
36% for the year.
Okay, and that U.S. commercial revenue guidance also lifted, now expected to exceed $1.178 billion, which implies at least 68% growth in that key segment.
68% plus for U.S. commercial? That's bullish.
Very. They also raised full-year adjusted income from operations guidance, now $1.711 to $1.723 billion, and adjusted free cash flow guidance lifted to between $1.6 and $1.8 billion for the year.
Yeah.
And importantly, they expect to stay GAAP profitable, both operating income and net income, in every single quarter of 2025.
Consistent GAAP profitability.
Yeah.
That's a key signal.
Yeah, signals confidence in that sustainable model.
So it definitely sounds like management feels good about where things are headed. What were some of the sort of strategic takeaways or insights they shared on the call?
Well, they really emphasize that this current success isn't, an overnight thing. It's the result of 20 years of investing in the platform.
Right.
And that's now meeting this kind of cultural shift in the U.S. market, especially around AI adoption.
Okay.
They also put forward this view that the big language models themselves, they're becoming somewhat commoditized.
Interesting point.
Yeah, and that the real differentiator, the value, lies in actually applying them effectively, which they argue their Ontology and Foundry platforms enable.
So the value isn't the model, it's making the model work in a business.
Precisely. They also lean heavily into that narrative about enabling the reindustrialization of America with their software.
Mm-hmm. Warp speed connection.
Yeah. And just generally conveyed strong confidence in delivering measurable impact and helping companies navigate, all the current volatility.
Yep.
A big theme was just relentless focus on execution, just getting it done.
Right.
They see their competitive edge really coming from that unique ontology layer. They think that positions AIP perfectly to capture the value from LLMs and enable these sort of mixed human AI teams.
Makes sense. What about the government side? Any interesting comments there?
Yeah, they actually framed the pressure and scrutiny often seen in the government sector as an opportunity.
How so?
Because it forces a focus on value and effectiveness, which they believe plays to their strengths. They sounded really optimistic about the U.S. market overall, driven by what they see as a meritocracy and just a raw need for solutions that actually work.
Okay. What about internationally? Did Europe come up?
They did touch on potentially applying that warp speed model to the European defense buildup.
Ah, interesting.
But they also kind of acknowledged that the readiness, the mindset among European customers varies quite a bit. It's not the same as the U.S. right now.
Right. Different adoption curves.
Yeah. And there was an interesting discussion about sort of hardware-centric thinking versus software. In hardware, you build the foundation first. In software, maybe you build the core function, the kitchen first.
Mm-hmm.
They see a shift towards more software-first or hybrid software-hardware approaches in next-gen defense programs.
Okay.
And they feel the U.S. has a distinct advantage in that kind of hybrid development. Different skill sets needed.
Right.
Ultimately, their stated goal is pretty bold. Provide a significant, sustainable, unfair advantage to allies and partners using their tech.
An unfair advantage.
Okay.
So wrapping this all up for our listeners, what are the main takeaways you'd highlight from this Q1 call?
Okay, key takeaways. Number one, accelerated revenue growth, really fired up by U.S. commercial, shows strong demand for their AI stuff.
Right.
Number two, that improving Rule of 40 score points to a better balance, growth, and profit.
Mm-hmm.
3, the big jump in TCV bookings gives good visibility into future revenue.
Yeah.
4, the raised guidance shows management's confident this momentum isn't slowing down yet.
Yeah.
5, their strategic focus seems clear. LLMs are tools. The value is in applying them via their platform. That's how they plan to differentiate.
Got it.
6, success across both commercial and government shows the tech is broadly applicable.
Okay.
And finally, number 7, that whole discussion around defense spending, the need for effective solutions, that suggests continued potential there, even if budgets get tight.
Okay, that's a great summary. Now let's shift gears to our segment where we put on our slightly more speculative hats.
That's right. The part where we say, this is definitely not financial advice.
Exactly.
Yeah.
Purely informational, maybe a bit out there. Based on this deep dive, what's an outrageous but maybe plausible trade idea that springs to mind?
Okay, here's one. Playing off that whole reindustrialization theme and the warp speed commentary. You could consider, hypothetically, taking a long position in a, let's say, carefully chosen basket of U.S. industrial companies, specifically ones that have publicly mentioned partnering with this company.
Okay, the ones getting the tech boost.
Right. The thesis is that adopting this tech could genuinely drive efficiencies, maybe market share gains for those specific industrials.
Interesting. Is there a hedge?
Well, to make it a bit more outrageous and reflecting management's comments on Europe, maybe you pair that long U.S. industrial basket with a short position in a similar basket of European industrial companies.
Ah, the ones potentially lagging in AI adoption.
Exactly. The ones management hinted might not be as ready, so it's essentially a bet on a U.S. versus Europe industrial performance divergence, fueled specifically by this AI adoption gap.
A transatlantic AI-driven industrial divergence play. Okay, definitely fits the outrageous but plausible description. Got another one.
Sure, one more. This one focuses more on the company's own stock trajectory, given the really rapid customer adoption they reported, especially in U.S. commercial, and that doubling of large deals. Yeah.
You could explore buying some out-of-the-money call options, maybe with a 1-year expiry.
Okay, a bullish bet on continued momentum.
Right. The idea is, if this growth trajectory keeps up, you could see more upward revisions to guidance. Maybe analysts boost price targets, creating potential for significant upside leverage with calls.
But calls are expensive and risky.
They are. So again, not advice, but to potentially offset some of that cost, you could consider selling some further out-of-the-money put options.
Right. Collecting premium, but taking on the risk of maybe having to buy the shares if they fall.
Exactly. It adds complexity and risk, but it's a way some might structure that kind of bullish view. Again, purely speculative idea.
Got it. Two very different speculative angles there. Okay. That brings us towards the end of our deep dive on this earnings call.
Yeah, we've certainly seen some impressive growth numbers, particularly from the U.S. Seems driven by that AI platform demand and a real focus on delivering tangible results for customers. And the raised guidance, strong financials. It definitely paints a picture of continued momentum, at least in management's view.
Absolutely. But just to reiterate one last time, those trade ideas, purely speculative, informational, food for thought.
Definitely not financial advice. Please, always do your own thorough research and due diligence before making any investment decisions.
So true.
We'd love to hear what you think, though. What stood out to you from this call? Agree or disagree with the strategy, the outlook? Join the conversation. Share your insights.
Yeah, we're always interested in hearing different perspectives.
Thanks for tuning in to Talk Tickers.